From the morning reading, bull markets turn 7 years old today, turning to the second longest bull market in modern financial history and perhaps what is the most hated bull market of all time. All 9 sectors and oil celebrate by rising. Trend continuation, bull flag patterns are forming. All sectors moved higher on Wednesday. XLE, XLK, and XLP were the strongest sectors, while XLF was the weakest sector. Oil futures rallied $1.85 to close at 38.18. Breadth strengthened as advancers led decliners 2.33 to 1 on the New York Stock Exchange and 1.48 to 1 on the NASDAQ. The percent of New York Stock Exchange stocks above the 50-day average reaches a 2-year high. The percent over the 200-day line tests fourth quarter high. New York Stock Exchange advanced decline line looks strong. New York Stock Exchange bullish percent index clears 50%. Buying of corporate and junk bonds shows new high optimism. Cyclical and material spiders challenge 200-day lines. The Aussie iShares turns up. The S&P 500 has gone 200 days since it closed at a 52-week high. That usually means a large decline as well, but not so much this time as the index has so far avoided a bear market. When it goes this long without a new high, it has not necessarily been more likely to ultimately fall into a bear market, but forward returns were still weak, especially when valuation was high. New 52-week highs have continued to expand. Most major equity indexes were at a 52-week low within the past month, but already new 52-week highs on the New York Stock Exchange outnumber new 52-week lows by more than 15 to 1. It has been exceptionally rare to see such an overwhelming number of new highs to new lows so soon after a bottom, and curiously, that hasn't been a good sign. The rally over the past few weeks has carried an increasing number of markets into extreme optimism. The number of funds in extreme optimism is jumping quickly. Most of the country funds have a 10-day optimism index that is now well into extreme territory, which has consistently led to flat to negative returns over the next 1 to 3 weeks, especially over the past 2 years. Hello, this is Stephen Harris, the head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:11 a.m. Central Time, and I'm recording this in preparation for the market day of March the 10th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into our morning report. And right there. There we go. Okay, so for the broad market indices in the United States, we have a mixed picture with, at the time of this cut, the S&P futures up about 5 points or about 1/4%, but the Russell down about 0.5%, NASDAQ up about 1/4%, and the Dow up just a little bit less at the time of this cut. Crude oil down about 0.4%, Euro down about 1/4%, bonds up about 0.5%, and gold down about 0.5%. And overseas action also quite mixed. China down over 2%, but Hong Kong right at scratch. Japan up about 1.26% to give the Asian markets a perfect diversion and going in every single direction, down, up, and flat. In terms of Asia, also mixed. In terms of Europe, I should say, also mixed. Germany up 0.25%, United Kingdom down about 0.4%. Macroeconomic reports for today in the United States. We had the weekly version of the unemployment claims and also nat gas storage reports and a 30-year bond auction. You have, looking forward for tomorrow, import prices is it. So we continue to have a very, very light week with most of what's happened this week in the macroeconomic report being just the usual weekly reports. In terms of the current volatility, We had with yesterday's action a fairly choppy day that didn't really lead to anything. Short-term VIX just under 19. IV percentile for the S&P a very low 26. The Russell 30, the NASDAQ a 30, and the Dow a 24. No standard deviation moves were put in yesterday on any of the 4 broad market indices. In terms of the charts, let's start off with the S&P futures chart, and you see ever since we got up to this resistance area, we pretty much have stalled, and we are now 1, 2, 3, 4 into the 5th day, and this, of course, is a live candle with the futures market from the overnight, into the 5th day where we are essentially just up against this resistance. We've probed the area a few times and not really had anything that you would call a confirmed close outside of that zone. Remember, we talked about that 2000 to 2010 area, and that's been the rejection zone so far. Now, do keep in mind that we are in the middle of futures rollover for all 4 of the U.S. broad market indices. So we'll have this go to the June contract with most of the volume probably rolling over tomorrow. Right now, most of the volume still on the March contract, but that's likely to change and be very, very fluid both today and tomorrow. There is a big difference between the 2 contracts. It's running about 9 points, with the old contract being a higher, in quotes, price than the new contract. So this is probably going to create some gaps and some funky charting. If you're working between the 2, just be aware that there's quite a differential in the numbers. Also, because of rollover, we could see some additional choppiness in the market with poor entry signals and poor follow-through is often characteristic of the Thursday, Friday of the quarterly rollover of these futures contracts. So, big picture, we're really no change from yesterday in terms of it's kind of a coin flip. We have certainly, and you heard from some of the authors in the morning reading, an increasingly number of bullish indicators that say that this should be just a bull flag and a continuation pattern higher. But there's also, some out there that are calling this, the end of wave 2 and expecting us to go for wave 3. At this point, if I have a bias, I'd say it's a little less than a 50-50 coin flip. I'd say that the bias is probably slightly to the bullish side in expectation that we eventually break out. But until we actually do that, we just don't know. Not likely to have a lot of stimulus today to create that movement, but we'll see where this goes. You see the Dow also right up against the resistance area. And the NASDAQ has actually fallen away from the resistance area. You could argue perhaps a little bit of a bull flag, though right now this to me looks more like a sideways consolidation pattern than a bull flag, with so many of these being similar highs, especially at the beginning of the pattern. Also remember, you're smack in the middle of the cloud, and cloud by definition is a choppy zone. And the Russell was the one that was behaving a little differently in the overnight, though that candle looks green there to me. The cloud kind of messes with us a little bit. But, again, are we looking for something of a bull flag and a continuation pattern here? Yet to be determined. We might get a little bit of insight into this by looking at our inverse markets. Normally, of course, bonds and volatility are inverse, but they're also in kind of a sideways chop. Volatility definitely not showing its hand quite yet. And then bonds also, I wouldn't argue is showing much of a hand yet. So everything, all these markets are still pretty much in a sideways market up against resistance. Gold has broken out of its pennant pattern, set a new 52-week high, but then has also been kind of fading and came back to former resistance turned support and that area is still holding. But you see we have both this diagonal resistance line and the former diagonal support line, plus a couple key moving averages, all kind of coming into a nice confluence or cluster here. So I would suspect that this should hold this general area, though gold can be quite volatile at times, and it can certainly do things to shake off the stops that are probably sitting right in this area just to end up going higher. The bias right there should be still higher. In terms of our daily report, we still are increasingly positive here. We have market phase 4, price patterns near horizontal resistance. Also, the expectation of bull flags, a very bullish kind of market phase. IBD has us in confirmed uptrend in terms of its portfolio investor posture. Accumulation distribution score on the NASDAQ is a D+, the S&P a C-. Those don't sound very good, and they certainly aren't healthy, but they are improved over recent weeks. GMI index still at a 4 out of 6 with a buy signal since 3-2. Decision point scoreboard, and new signal today with the S&P 500 on the intermediate term trend model signal firing off to the bull side. So that joins yesterday's Dow signal firing off. So we're still looking to see if we can start to see something of a stack here, but these are probably still suspect until we see an actual breakthrough on the charts through this resistance area. But we're watching to see just where this bottom of this current swing comes in. Does this turn into a bull flag and confirm out, or does it break down? And the bias here is slightly to the bull side. It's still a market in transition till we see this stack and more agreement between these signals. We have to basically call this a market in transition. Position sizing opinions, both opinions are coming in at pretty healthy numbers, 100% and 75%. Intermediate term market posture, very strongly bullish with a weak bullish sentiment line. You see all 4 indices are up in the 90s. Down a little bit, but anything that's above an 80 is still going to retain the very strongly bullish kind of setting. In terms of the trend strength, we are weak bull, but improving. In terms of hedge warning status, also still at level 0+, normal with some elevated risk conditions. In terms of special opinions, also no change there. We've been basically in this stall pattern for several days, and many of these settings haven't changed much in those several days. Option income strategies, VIX is borderline acceptable to initiate new positions for novice traders. Consider reduced position size. Covered call strategies and put selling are both in the acceptable to initiate new positions for novice traders. You might want to be somewhat defensive. I put on some positions yesterday in covered calls and put selling, and certainly using a mixture of in the money and out of the money strikes, using more low beta much more often than high beta positions, and then also legging into some of these setups with out of the money puts in a position size that you are willing to own. Is all kind of standard fare in these kind of defensive conditions. Now we will, as these conditions continue to improve and stack, we'll become less defensive. But until we get some alignment with those conditions, we certainly want to continue to be careful. We do have some warnings still in place. We have from the volatility-based area, market in decline and sharp increase warning of both still fired off. VIX futures are still up over 18, albeit not by much. We have our current week out expected move is still a little bit over 40, but relatively low compared to recent weeks. New highs, new lows, just barely went over the warning area in terms of, this time, a positive warning. Anything over 300 is considered statistically significant, as it were. Key intermarket risk aversion indicators, all 5 are risk on. And then in terms of sentiment, and remember, sentiment, they can be very, very extended for prolonged periods of time. What we do is we note when they are extreme and then look for reversal signs in the price action of our charts. The stocks short term are currently relatively extreme at a 7, as is gold. In terms of fear and greed, still pretty much the same place as yesterday. Yesterday was a 70. Today we come in at a 71. Not quite to extreme levels, but certainly getting pretty high. In terms of sectors or industry groups that are pretty high, you noticed the morning reading, one of the authors mentioned a number of countries with extreme readings. And you see here Brazil, Canada, Mexico, all up there in this kind of upper extreme area. So keep an eye on these 4 price action reversals. In terms of industry groups or sectors that are in intermediate term bullish postures, we've got a very healthy mix really of defensive sectors as well as more high beta being mixed in here. So this continues to be an improving picture, and this is certainly one of those signs that we take as that this may be actually a bull flag pattern at this point. In terms of sector specific, you see the short, the intermediate, into the long term, mostly green, though not quite yet a sea of green. Healthcare being held down by biotech. And then you see also the transportation, energy, financials, and materials in the long term are still, in a more neutral stance. In terms of percent change for yesterday, energy was the big one, followed by technology and staples. So kind of a mix of defensive and higher beta. And then you also have utilities here in the top half. And then down here near the bottom, financials. And that's something to watch because healthy bull markets need to have the financial sector participating. And that really is not been happening much of late. You see the 5-day is still negative, though the 1 month is pretty much in the range with many of the other sectors. So the financials certainly are not as consistent as are some of these other sectors in terms of performance at this point. So that should be enough for today. If you'd like to get a heads up when we send out an alert about a hedge risk change, or to get the periodic blog articles that we publish, just get onto the email distribution list, and that's very easy to do. You can go to this website here, scroll down just a little bit, you'll find this button, click on the button, put your name and email address in there. That'll also get you a hyperlink for a copy of our ebook Portfolio Strategy. On the smartphone, you can also do this by texting Falcon Global, all one word, to the number 22828, and that will take care of the same thing. As always, we greatly appreciate you liking us on YouTube, or retweeting us to your Twitter followers, to your StockTwit followers, to your other social media followers. That is a pat on the back for us, and we greatly appreciate that and notice it every single time you do that. I'm going to scroll through the rest of this. If you see something that you are interested in, just hit the pause button, get that hyperlink, and you'll get additional details about what's going on with these various offerings. Disclaimers as always, hit the pause button if you need more time to review, and you see the hyperlink down here at the bottom for the full set of disclosures. We'll see you back here tomorrow morning with the Falcon Global Market Preview. Good trading.